Get a HELOC right now. Hey, what's up, everybody? It is Jeff Javarthan, Jeff the Mortgage Pro. Thanks so much for watching. If you like my videos, please make sure you click the like button down below. That helps push the algorithm out to get other people to watch my videos. And if you really like the content that I'm putting out about mortgages, please make sure you subscribe to my channel by clicking the subscribe button down below. And if you really want to know when my next videos are coming out, go ahead and click that little bell button next to the subscribe button. And that way you can see when the videos are coming out. All right, today we're going to talk about getting a HELOC right now and why would you get one. So let me give you a couple statistics that I think are going to blow your mind. The average equity in a home right now across the United States at the end of Q1, according to CoreLogic, is $274,000. That's a lot of equity. Okay. The second statistic that I think is kind of mind-boggling is about debt, and that is the consumer credit card debt in the United States. According to the New York Fed, at the end of Q1 2023 was $986 billion. $986 billion. That is mind-boggling how much money that actually is. That's almost $1 trillion of credit card debt across the United States. That's $50 billion more than the highest peak in Q2 of 2019. So we are way above where the highest peak was before. And if you look at the graph, it's actually like almost an exponential curve going up. So I think that we're going to be over $1 trillion really soon here. And that's bad. It's not good that consumer debt is increasing that much. The average credit card interest rate now, as of July 2023, is 24.9%. So that's another way of saying 25% because it's almost there. And the average car loan interest rate as of July 2023 is 9.21%. So another absolutely high interest rate that you have right there. Okay, so according to those statistics, like there's some ideas that you can think of what you would want to do with a HELOC or a home equity line of credit right now. So a home equity line of credit is like, how do I describe this to everybody? It's like a big giant credit card that's attached to your house. It's secured by your home. So you keep your first mortgage, you keep your 2.5–3.5% interest rate, whatever it is. Then if there's enough equity in the property, you get this home equity line of credit as a second mortgage on top of your first mortgage. And what I like about the HELOCs is they have flexibility. You can draw money on and off the HELOC typically. For most of them, you have to check with your provider of your HELOC to see how those work, usually for the first 10 years. And then for the remaining 20 years, that's the period where you have to start paying off the HELOC. So if you use it or you don't use it, it's up to you. If you don't use it and there's no balance on there, then you have a zero payment every month. But if you use it, you're going to most likely be paying interest only on that particular balance. You can always pay more on it, or you can pay it off as soon as you want to. The interest rates are typically going to be a little bit higher, and they are variable as usually the market is fluctuating. And as the Federal Reserve increases rates or decreases rates, they are directly tied to the home equity lines of credit, which is not the same for first mortgages. So that's a little bit about HELOCs and why you may want to consider one of these versus a first mortgage cash out refinance. Okay. So 3 or 4 things you could do with your HELOC right now. You can pay off debts that, going back to those statistics, if you have credit card debt that's at 24.9%, or if you have car loans that are 9.21% or higher, then it may be a good idea to take a look at getting a HELOC, keeping your first mortgage interest rate fairly low. Hopefully it's low, and you refinanced or purchased your house back in 2020, 2021. So paying off debt might be a good idea to do with that HELOC. The second thing you do is improve your property. Okay, one of the things that it's traditionally used for is to improve your property, like adding a bathroom, adding a bedroom, improving your roof, updating your garage, updating your kitchen, updating a bathroom, whatever it is that you want to do that's going to help improve the value of your property. A HELOC might be a good consideration to go ahead and try to do that, and that way you can keep your low interest rate on your first mortgage and not have to worry about a giant increase in your monthly payment. And then 2 other things that I always like to consider when you have a HELOC, and most financial advisors that I chat with recommend that you get a HELOC, and maybe you don't need to use it, and that's totally fine. But there's 2 things that you can use it for. One is an emergency and one is an opportunity. So if you have an emergency, maybe you lose your job and you don't want to jump into your savings right away, you could use your HELOC. You could use that debt to help fund your lifestyle for the time being until you got back on your feet. Okay. That'd be, maybe somebody dies in your family and you need to be off work for 2 or 3 months, something like that. I hate to be morbid on that one, but for the most part, you can use it for any type of an emergency that you would ever need. There's no questions asked on what you're going to be using the money for when you draw it off your HELOC. Okay. And the other one is the opportunity. So say you, have a HELOC, but you don't have any balance on it. And, you find a house down the street that, your neighbors are going to sell. And you think, man, this is going to be a great rental property. I'm going to go ahead and jump in on this and see if I can use, this HELOC money to go ahead and try to get you some more money, income coming in via passive income from cash flow of rent. And you want to use that for an opportunity, you could totally do that. So that's another thing you could do. So either an emergency or an opportunity are two things you can use your HELOC for. So at the end of the day, rates on HELOCs are going to be a little bit higher, but if they drop in the future, you can always refinance these just like you can refinance a first mortgage as well. So take that into consideration when you're getting your HELOC. And if it's, comes down to it, what I would always make sure that you say is, let's run the numbers. Let's just make sure that they work. I would always want somebody to run the numbers with me before they actually made a decision on whether or not they got a HELOC or not. And that way we know going forward that if they're going to get a loan, then they're going to be well taken care of and they know exactly where they're going to be and what it's going to look like, and everything's going to be structured appropriately. Okay. So if you are considering a HELOC, I'm going to put my application for a HELOC down below. And I'm also going to put my calendar link down below, which is my calendar. And you can click on that, schedule an appointment with me for 15 minutes. I would love to chat with you about what your options are and what you're considering your HELOC for. And we'll see if you can get you a HELOC going forward if that's something that you're interested in. Chat with you on the next show. Have a good day. Bye.